So hello and welcome everyone to this podcast. This is the very first episode of Surge's Knowledge Base podcast series, wherein we will invite some of the best full-time investors and learn from their investing journey. For the very first episode, we have with us Chinmaya Bhargava of Badrinath Holdings. Hi Chinmaya, how are you?
Hey Ankush, thanks for having me. Nice to see
So
you.
Chinmaya is a active collaborator on Value Picker Forum, and some of you might also know him from his Twitter handle at Chins, where he shares a lot of interesting insights on a regular basis. I'm personally very excited for this one because Chinmaya follows a research process that is not well followed by a lot of people, and it is exactly opposite of what I like to do as a research. So there will be a lot of interesting insights to gather from this conversation. So before we begin, quick disclosure, Search Capital is a trade name used by me, Ankush Agrawal. I'm a SEBI registered individual research analyst. Nothing that we discuss in this podcast in terms of examples that we'll share would be recommendations. So keep that in mind. You might find full disclosure in the descriptions below. Chinmaya, do you have any kind of SEBI registration?
I don't.
Okay, great. So Chinmaya is not SEBI registered, right? So, Chinmaya, let's start from the very beginning. So, how did you end up in the market? Like, how did you start investing? When you started investing?
So for me, it was about 5 years ago, and it was to help my family with, managing family money.
Okay.
So our family is a bit of background. We were furniture designers about 40 years ago, and
Oh,
then they uh, ran a museum in Ahmedabad, okay, with art. And now most of the family business is in equity markets. So this needed to be a full-time job, and I took it upon myself to
okay.
uh, work with the markets.
Right. So, you entered just pre-COVID, I'm assuming 5 years. That's probably 18, 19.
Yeah, just around then.
That's right.
When
So, yeah. So, what was your initial experience like? I'm assuming that since you entered with managing your family wealth, you would have entered with a more professional approach than some of us, like who started with trading. Try to see how it works. So, how was your initial experience like? Like, how was your approach? Did you make money, lose money, lost money?
So in the beginning, I'll be completely honest. Everyone goes through an initial learning period where
Right.
looking back, you're like, "What was I doing?"
Yeah.
So for me, in the initial days, it was really that I started off, with screener, things like that. Much
Okay.
like what anyone, in the retail space would be doing. And I used to look a lot at backward facing metrics in those days.
Right.
So
Right.
on screener, trailing numbers, trailing sales growth, things like that. And looking back, it was you know, you would always look back and say it's a mistake because it doesn't really give you any
Yeah.
predictive power on
Yeah.
what's happening in the future. But I didn't know that at that
Yeah.
point in time. So it was really, in the beginning, try to buy quality, maybe.
Okay.
And for me, from there, it became ways of trying to understand forward earnings. And, for anyone in the retail space, this amounts to listening to management guidance on the con calls. There might be a TV interview
Right.
somewhere. So I
Right.
thought that's what the work involves. You invest, you try and keep up to date with the company. And for me, I think the largest leaps in my journey as an investor came in trying to better my understanding of forward numbers, like an understanding of a
Right.
business like a year out or so. And I can give you
Right.
two examples.
Okay.
So, uh, one one kind of insight that came like a light bulb for me was that, oh, this kind of analysis or this kind of insight is possible. People have done this kind of work. That has been the sort of thing that has driven my growth as an investor, realizing that, okay, there's something that you can do that
Yeah.
really helps your insight. So an example here was with Loris Labs. Okay, it was a company
Okay.
2 years ago.
Yeah.
And at that time, the synthesis division for Loris was reporting really, really strong numbers.
Right.
And one investor pointed out to me that there was a COVID related drug in this mix,
Yeah.
which was contributing to this. And,
Right.
if you looked at the numbers on the outside, you just wouldn't know.
Yeah.
So for me, realizing that, for example, you can use things like export and import data. We'll talk more about
Yeah.
this later
Yeah.
on.
Yeah.
Was a big moment for me that okay, there's a lot more this kind of analysis is possible, and could be a very powerful tool if you know what you're doing.
Right. Right. No, I think everyone to an extent has the same journey. Like if I recall, like when I started, like I'm a chartered accountant background, right? So I thought that being a chartered accountant, I can read numbers better. And that's where I started. But it took me a while to figure out that, the reported number doesn't matter that much. They're already discounted. So yeah, I can understand. Like, great. So coming to the interesting part now, for the viewers who don't know Chinmaya well, I will tell you that Chinmaya follows a research process, which commonly used to be called Scuttlebutt, but I don't think a lot of people do it now. So Chinmay looks at a lot of alternate data sources like export, import data, tenders. He talks to a lot of people like peer, competitors, past employees of the company. And that's how he tries to figure out interesting insights to help him uh, do a better research and invest. So Chinmaya, like the question that I wanted to ask earlier was, how did you get into Scuttlebutt? So you've already shared that, the Loris was an example. That's how you started into Scuttlebutt. So wanted to understand, how do you go about it? So for example, you figure out a company, okay, this is a business that you figure out. This is looking interesting from whatever annual reports, concalls that you have. Then how do you get into the Scuttlebutt process? Like what are the areas that you try to cover it? How do you do it?
Yeah. So for me, the first thing that I want to point out is why even do this at all?
Right.
And I think a large part of this is I found that Scuttlebutt could save you a lot of time in getting up to speed. So the amount of interactions that you have with management, it's quarterly, right? If
Right.
you have access to them and you can meet them, it's more often where you get your questions answered, but it's always their perspective. For
Right.
me, I found that in Scuttlebutt, if you can speak to the same kind of people that you mentioned, clients, suppliers, competitors, it allows you to have a much better understanding of a cycle where we are in it from different stakeholders who aren't as biased. The
Right.
second thing, it gives you a clear understanding of a company from the people who buy their products. So they are the best people to sort of place them, place their abilities, and also shed light on the middle management of a company, which otherwise we just wouldn't interact with at all as investors. We only speak to that one person who's, on the
Right.
con calls. So for me, uh, I think also as a disclosure, there are several ways I think to make money in this market. My way and
True.
my approach is one of them. I don't think it's necessarily, the best or better than anything else. It depends on your
Right.
mindset as an investor and what works for you. So for me, I try to cover all aspects, as you said. So it's not about reading the annual report or things like that, but you often have questions on while going through a business model on a transcript. Right? Like,
Good.
for example, it could be receivables. Why is a company's receivable days this high? How have they been able to scale growth this fast? What
Right.
is what is the reason that a particular product might be picking up more? What gives them confidence to take on capex? Things like this. I try and speak to people in the industry who've worked with them to try and get insights to this. And not all feedback is bullish. Not all feedback is
Right.
positive. We can talk through several
Yeah. Yeah.
examples. Well, let me
Yeah.
know what
Yeah.
your questions are.
Yeah. So, Chinmaya, how do you try to connect with these people? I mean, what are the sources? Like, say, you reach out to someone on LinkedIn, and are these people so helpful? Like, coming from the perspective of an investor, are these people willing to talk that easily, or it requires some form of convincing?
Yeah, so I think there are three or four different ways that one could do this. Okay, so the
Okay.
first is if you know and have a relationship with merchant bankers, they
Okay.
help you get connected with management. Sometimes management themselves have connected me to clients. Dollar, for example, was one where
Yeah.
they were very helpful in connecting me to this supply chain company that they work with. And we
Okay.
got to discuss several case studies. On the other side, a lot of brokers today, almost every
Good.
broker offers a service where they do this outreach for you and they
Okay.
reach out to prospective people in this industry. They charge a margin on it, they offer them a consulting fee, and they bring you
Good.
this service. So nearly every single broker today in India uh, does this kind of work. The third
Okay.
is through your own network as an investor. So people that you speak to
Okay.
will have friends who know someone who knows someone, and then so it's sort of
Okay.
really a mix of all of this.
Right. Got it. Got it. So Chinmay, can you discuss a couple of examples in the past wherein, this kind of research, talking to people have brought about a very big insight that allowed you to invest in a company that end up doing very well. On the other hand, another example wherein you figure out something like a red flag and that helped you avoid investing in a certain company which end up turning out to be a dud. A couple of examples will help.
Sure, I can give you examples for both. I'll so I think what I wanted to say though, to understand my research process, it's for me, I like to go into as much detail of a company's business as possible, right? So to take an example, for example, two companies, I'll give you Kaplan Point and Punjab Chemicals. As a
Okay.
disclosure, I don't own either right now, but this
Yeah.
is just a case study of how this helped
Yeah.
me. So Kaplan Point had a subsidiary that they were targeting as their next leg of growth, and this was an injectable facility,
Right.
okay, into the US. And for me, this is a good example of where export import data can sort of help you. And the idea here to start with is this EXIM data is accessible to anyone. It's behind a paywall, but it's not,
Right.
it's something that isn't out of reach for people. What's crucial here is that the insights that you mine from this data
Right.
depends on the kind of work that you can do on this. So mostly it's not investors who use this tool, it's companies who use it themselves to try and figure out,
Yeah.
who are their competitors
Who,
buying from,
yeah. Who are they selling
right?
it to? Who are they buying? Yeah. Yeah.
Exactly. So with Kaplan Point, for example, I was able to look through this data and for really understand their product portfolio. So for a pharma company, it's
Yeah.
really difficult to understand how the business works because it's like a portfolio of, like a
Yeah.
mutual
Yeah.
fund, right?
Yeah.
They'll have, instead of stocks, they'll have maybe 10 drugs. Each drug has its own supply and demand cycle.
With
So it's
multiple
really difficult.
SKUs. Yeah.
Exactly. But
Yeah.
this was an example where you can actually track this. And with Kaplan, the realization for me was that they go after these legacy drugs, which are not like large molecules that everyone is running behind, but rather are
Mhm.
these smaller molecules that currently today, uh, there might be
Couple of
one
million
supplier.
dollars. Yeah.
Yeah. Maybe
Yeah.
$10 million. Dr. Reddy's might be a supplier.
Yeah.
They'll have 60% market share. So Kaplan will go after
Right.
these drugs, right? Where
Okay.
there's not much interest because it's a legacy drug. There's one incumbent.
Right.
That incumbent has 60% market share. And for that incumbent, it's a small molecule,
Right.
right? Another example is Punjab Chemicals, where I found that when you compare, their exports to their peers, they stand out in having large market share in their molecules, 60% market share, 80% market share in one molecule. Then you realize they sell to regulated markets. They have clients in Japan, for example, where others are selling in spot markets in
Hmm.
unregulated countries. So it really helps you also understand and know where to place them. Okay.
Okay.
With speaking to clients and suppliers, I'll give you a couple examples here as well. So I don't want to name this company because I think the
Yeah.
float is really tiny. But there
Yeah.
was a pharma company that I'm still invested in. And this pharma company recently, their margins turned around. Okay. Like they used to make about
Okay.
5% margins for the longest period. And then now they're doing about 15, 16% EBITDA margin sustainably. So we got to speak to an ex scientist here who
Okay.
explained how, for them, when he joined, he had brought about several improvements to the process line, which improved the yield of their key molecule by about 30%.
Okay.
Okay, so this kind of insight helps you understand that, okay, this margin improvement is not cyclical, it's not reliant
Yeah.
on
Yeah. Yeah.
raw material prices. It's them improving their process, getting better efficiencies, and then able to sell that at a more cost competitive price. On the flip side, there was a pharmaceutical company, I don't want to name this again,
Yeah.
where an ex-employee was able to tell me that they had a COVID molecule on their balance sheet.
Okay.
And a lot of the inventory that was in the annual reports was actually related to that COVID molecule, which needed to be written off.
Right. Yeah.
And maybe a couple of quarters after this, they reported significant losses, about 200 crores by, writing off this inventory.
Writing about.
So this also helped me avoid this, knowing that, okay.
Yeah. That's the best part about your approach that I like. You might be able to get some insight, which market doesn't know it well, especially when it's a small company, like not well tracked. So that allows you to be ahead of a lot of people in investing, right? One of the important questions that I wanted to ask over here is that, hey, like you also said, a lot of times you don't get just the good, but also negatives about the company, right? So there could be situations where the overall picture, the overall play on the company or the investing thesis is great. But while talking to some of these people or tagging some of this granular data, you might get certain negatives, right? That might make you biased. So, like how the typical saying goes, right? You're missing the forest for the trees, right? So I'll give you one of my own examples. So there's this company called
Right.
Recycling, right? They're
I know
into
the company.
electronic waste. Yeah. So I came across this company a year and a half back when the EPR regulations were coming out and everything. So the overall picture looked great, right? But since the company didn't had any business to an extent till that point, I realized that I need to speak to someone to understand exactly what is happening, right? Because a lot of times what happens, the government comes out with a lot of things, but for them to actually play out tangibly takes a lot of time, right? So I ended
Sure.
up speaking with the consultant, and she told me that, at the moment, nothing is happening. Even the portal wherein the credits are have to get issued, even that is not live. So I realized that, nothing is happening. I'll look at it a year later or something. But during that period, the stock has gone from, say, 190 to 600 now, right?
Yeah,
On the other
crazy
hand,
number.
on the other hand, there's another example of, say, dollar, right? Wherein when I looked at it as a desk researcher, I never liked it because the growth wasn't there, nothing was happening. It was only when I spoke to a distributor, I realized the kind of change that is happening, right? But in my case, my sample size is very small, like a couple of companies, because I don't do that kind of research. But given that that is what you do, so what is your take on this? That you might miss out a certain company because you got to know a lot of smaller negatives, which might not be that relevant if the overall picture is good. And so, how relevant is this issue? And if so, how do you tackle it?
That's a very good question. Actually, the pharma company I told you about, which reported
Yeah,
the losses
yeah,
in terms of the balance sheet, this risk played out. The stock
yeah.
still doubled from
Okay.
where it exited. So I think you need to, as you said, separate price action from these insights that you get. I think there are two answers that you can give you that. Of course, you get negative feedback on these people at some point in time. What I try to do is not speak to just one person in this value chain. So I'll give you an example. There's a company called Prop Equity, okay, that
Right.
is working with real estate analytics. And their business model is that any bank that does a loan against property, they go and value the property for a fee because banks need an independent valuation done.
Right.
So here, I've tried to speak to almost every client that they work with, almost every private bank. I've spoken to competitors, right? So along with Prop Equity, there are two or three other pan-India players. I've spoken to them also. So for me, the idea here is that, one person might give you something that's negative, but the bigger picture, often not everyone is wrong on it together. So if everyone in the mix tells you something negative,
Yeah. Yeah.
then it's a sign. I'll give you actually an example of a negative feedback for a company we both cover, which is Garware.
Yeah.
And here the negative feedback was more on their product being excellent, really, really good product. But the feedback was that they used a particular adhesive on their paint protection film that was too strong. So
Right.
these films need to be replaced every 6, 7, 8 years. And at that point in time, when you remove it, the adhesive could, take the paint away, things like this.
Yeah.
So, uh, so you can, take feedback into account. If you speak to enough people, then either there's a consensus view that could be good or bad.
Right.
One off, if you speak to someone, I think, yeah, you can get biased. I am someone who does listen to this. I value feedback that people give a lot. The last thing that I want to say on this is I found that there are always several ideas that are investable. And,
Right.
idea
Right.
generation for me is never the bottleneck. So
So,
I never regret exiting a stock for whatever reason I think I'm not convinced on, even if the price action goes on to surprise.
right.
So yeah,
So basically, what you're saying is you need to sort of get a balance, right? So if you say speak to five people, four of them say good about it, one of them said negative. So basically, it's like what is their investing? You never get a perfect opportunity, right? There's always ifs and
definitely.
buts. Yeah, you have to balance that. Great, great. Uh, One more thing that I wanted to ask is, so this approach of yours, is it that it is much better suitable for certain kind of stocks or businesses? So, for example, I'm assuming that if it's a very small company, no con calls, no presentation, management doesn't even talk. So, in that case, if you have an insight, maybe going after that company, looking for what is happening over there, might be more fruitful than a company which is well tracked. Everybody understands the business for your approach of research. So maybe from what I know, you invest a lot of cyclicals and export facing business because therein you can get the exports data and all that stuff.
Sure,
So
both. I don't, so for me, I don't reject any company. Like I invest in large caps also. It's just that, as you said, one thing to say here is that my approach, I don't think is particularly unique where it's only me who's doing this. So I know, investors in my circle who are, but this is actually something that's bread and butter for a lot of the large funds. So these large funds who invest in, mid and large cap companies, they call it channel checks, where they'll go and speak to
yeah,
bankers, they'll speak to clients. So for them, they do it routinely. Okay. As you
okay,
said, for me, I think because of the fund's constraints on liquidity, not many people do this for sub 1,000 crore market cap
yeah,
companies, where, as you said, there's not much publicly available information either. So
right.
naturally, it seems like a really good space to hunt. So I completely agree. But for me, I try to not reject an idea. Like if there's a domestic facing company, I enjoy that as much as an export facing one.
Uh, Chinmaya, on your portfolio construction, so I'm assuming that given that you have a much better insight, which eventually should lead to a much better conviction, both on the buying, holding, and selling side. Do you follow a concentrated portfolio approach wherein, there would be a couple of names would be much larger portion of your portfolio because you ideally would have much better insight and would be able to track them much better than, say, some of the normal overall investing circle that is out there. So do you have a concentrated portfolio or do you have some other kind of approach?
So for me, I'll tell you about my portfolio approach. The idea here, and I think this is something else that I differ from a lot of people on, which is that I embrace churn a lot. Okay.
Okay.
And this has been a market in the last few years where there's been uh, a huge reward, let's say, for near term earnings, where
True.
stocks are priced almost to perfection. And if they
Yeah.
miss or disappoint, you'll find them
Yeah.
down 6, 7% the next day. So for me, about half my portfolio, I I realized something that instead of hunting for multi-baggers, right? Uh, that's something that a lot of people try to do because
Yeah.
the reward is
Yeah.
high. If you go on Screener and you look for, companies that have returned more than 100% in the year, in a normal year, you would say that it's more than maybe 100,
Yeah.
150, right? Out
Yeah.
of a universe of about 5,000. In this market, it might be a lot more.
Yeah. Yeah.
But if you change that and look for stocks that have gone up about 20 to 30% in 3 months, that number is far higher. It's around 900 to 1,000 usually,
True. True.
right? So for me, I try to look for a mispricing. And half my portfolio, I try to find bets that I don't want to hold for a really long time. I just want to play a 25, 30% swing. And if I make that, I churn out of it.
Okay.
So this approach I apply even to a trade, even to an idea. I try to, any company that I invest in, I try to do as much detailed work as I can. It may
Yeah.
seem like overkill, but the idea
Yeah.
here is that for me, it's more about raising the hit rate, being confident on the cycle, being confident on
Yeah.
where we stand on earnings. And yeah, so half my portfolio, I try to churn quickly, where if I can find 25, 30% upside, I move on to the next idea. The remaining 50% is more concentrated. So I allocate maybe, between 6 to 10% on 5 companies where I think, okay, I want to hold these for a longer period. And typically those are the ones which haven't performed as well in this cycle because maybe the earnings near term aren't as strong as
Yeah.
the other side of the portfolio. So that's my approach.
Makes sense, because I think this is something that even Mark Minervini has talked about in his book, when he said, rather than going for like 50-60% kind of trades, even if you keep getting that 15-20% every week and you just keep rotating, the end outcome at the end of the year would be much bigger than someone who has tried to hold something for the entire year.
Right.
So makes sense,
Exactly.
makes sense, makes sense. But and the way I like that you try to split it between half of a portfolio, because doing something like this for the entire portfolio might be much difficult, at least in the longer run, because I mean, maybe the current market gives you a lot of such opportunities, but expecting that would continue every time, I think that's a
Is
difficult
unrealistic.
task. Yeah,
Yeah,
yeah.
I agree.
Another question that I wanted to ask, something you touched upon earlier, that so this kind of exports data that you were talking about, right? So increasingly the data is coming out everywhere, right? So now a lot of brokerage house every quarter cheams out the notes of, say, pharma export data, chemical exports data as well, right? So I think about a year and a half back, it has started happening post-COVID, when people realized, after the COVID mishap, that a lot of people got on the wrong side of the fort, wherein complex Davis, Laura's, they ended up buying at a time and the growth was very high because of COVID and molecules, and then they sort of missed a lot of stuff. So people started tracking export data, and the broker also reports it now. So I wanted to know, how easy is it to read the data? Do you believe that over time, if this data becomes more and more public, which will happen ideally, do you believe the edge for someone like you, who is now relying a lot on this kind of data, would lose out? My perspective over here, over the years, have been, see, the market always has this myth that information edge is no longer there, which I don't agree to and honest, because we have gone from a period wherein there was lack of information to a period wherein there's a lot of information. So more than getting information, analyzing and getting insights out of them is more relevant. And that is more difficult than getting actual data, which was there earlier. So what is your take? I mean, say for someone, a common investor, if they get data, is it very easy to read and is it very easy to get insights out of them, or it requires a lot of effort?
Yeah, you've hit the nail on the head. I don't think access to the data itself is an edge at all. It's effectively an Excel where you have a shipment made by this company. This is the
Okay.
product that the shipment contains. This is the average price per kilo, for example, of whatever is in the shipment. This is the client it's going to. This is the country it's going to. That's one line in your Excel. You will have 15,000
Yeah.
lines for every shipment that a company has sent. So, as you've said, a lot of brokerage houses have started putting up, oh, this quarter, Cipla's
Yeah, 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 yeah.
exports are up 12%. To me, that's, having a very powerful tool in your hand, but using it like a hammer in,
Yeah, I have
not,
not seen that
yeah.
translating into actual results for the quarter, what they try to put out.
Yeah, it's more than that. I think so. There are several nuances I'll explain here. A lot of companies like Loris, for example, got paid before the shipments went out. So
Okay.
actually, when you saw the spike, for example, in export data, they would have already
Right.
received revenue for it the previous quarter,
Oh,
right?
wow.
So for a lot of companies, there might be a lag in when what you see in the exports and what actually translates into revenues. For example, a lot of commodity companies, they do an order book with a 60-day lead time. So if the spot
Okay.
prices have moved up 30%, you only see that in the export data 2 or 3 months later. So I still maintain that export data is not, forward looking enough. It just tells you what's happening at the moment, but it does not predict what can happen 2 or 3 quarters down the line. I think that access is something that everyone should that can have. I think the pricing for it is similar to what some advisory companies charge. It's expensive, but I don't think it's prohibitively expensive if you pool in together with friends. I think getting insights from these requires a lot of hard work. So, for example, with RACL, right? I think
Yeah.
you miss the forest for the trees if you start to say, oh, the export numbers are up this quarter or down this quarter. Instead, you can look to see, have they scaled their revenues with a client like Kubota or KTM or,
Right.
BMW. How much have they done it? Who's been driving this growth? For me,
Right.
these insights aren't the end all, right? They're not the end of what I want. It allows me to go to the management and have a much more, like a
Better
richer
conversation.
conversation,
Yeah.
right? Instead of them saying, oh, this was down or this happened, I can say, what happened with this client? Was there a delay? Then they come to you and explain what happened. So
Right.
it's a tool to have a better grasp of the different moving parts. It's not something that's an edge at all where you should say, oh, I know something that others don't. In developed markets like the US,
Yeah.
the stocks are perfectly priced with the movement of shipment, for example.
Okay. US also has that expert network sort of
Exactly.
thing, right? Wherein I think it's very
Exactly.
accessible to a lot of people.
Very accessible is a misnomer because there, I think experts in general charge around $1,000 or nearly a lakh for an hour.
Alright. Okay.
So it's prohibitively expensive.
Yeah, but it's very well used, right? I mean, I
Correct.
mean, most funds use over there, right? I mean, it's a
Correct.
common
Correct.
approach for research. I mean,
Correct.
for as far as I know, the professional industry in India, I don't think a lot of people don't use it, especially on the PMS side. Maybe the mutual fund guys might be using it, but still, I think we have a lot of time before that kind of research gets professionalized over here.
Yeah. I
So on
think,
this
yeah.
yeah. Sorry. Go ahead.
No, I was going to say that it's not access to this that becomes an edge. I strongly feel it's, you as a person, how much you can mine from it, what insights you can get, the right
Yeah.
questions to ask someone, the right person to speak to. All of that is in your hands.
Yeah, that's the point, right? Here, a lot of people are not willing to do it, right? Because I think India as a market is where a lot of people have been able to make money, specifically because, I mean, if like I'll give you a very good example. This is something that one of the very first mentor told me. So Debashish sir of Money Life. So he has like very huge experience. Like he has seen market since 85 or something. So even before I was born. So when I joined Money Life, it was my very first role. He told me that, before 2014, it was very easy to make money in the Indian equity markets for whoever did any effort because that time screener and value picker was not there, right? So you have Avanti feeds growing at 30-40% available at 7 times because there was no screener to figure out, who has grown how much this quarter and see what's the PE rating, right? It was only who has gone through, say, entire list of BSE, see, okay, Avanti feeds, ye kya karti hai, what is the growth, look at the annual report, and then figure out, okay, this company is growing so fast. And then calculate the figure of price to earnings even manually because screener was not there, right? It was like post value picker and screener coming out, that is when it started becoming very difficult to make money so easily, which was there pre 2014. And that is one of the reasons that why Indian market has seen so much re-rating. Because earlier, since there was no discovery at all, you used to get 30-40% growing companies 7-8 times multiple. Now you
Agreed,
never
agreed,
get it, right?
agreed.
Now
Vinati
to even
Organics, I think, was at a PE of 4 in 2010.
yeah, now to even Lala companies for no growth trades at 15-20 times,
Agreed.
right? So I mean that's a weird thing about Indian markets, right? Now also I'll say relatively people say 20-25% is so easy, right? That's the minimum target that people have. But if you read a lot of commentary of the foreign funds, I mean 10-15% is what they're trying to do. Because obviously the market is so much well discovered. I mean, even a very small company might come out and share quarterly guidance, like what we get for IT companies now, right?
Right.
Right, right. Chinmay, on this exports, which service do you use to get the data for anyone who's ready to invest and do it?
Yeah, it's called Volza. They are one provider.
Also,
I think there are two or three, and it comes down to you on which, UI and interface that you like. So Volza is one that I think a lot of the PMS funds use. I can be
okay,
even more transparent. I think they charge around a lakh and a half for a year,
for you.
and they give you 5 users worth of licenses. So even if you,
Oh, wow.
band together with 5 friends,
Yeah, it's relatively cheap then, I think.
exactly, it's not prohibitively
20,
expensive.
25
Access
is,
cannot be your moat for
yeah, yeah.
investing.
Yeah, but a lot of people don't use it, like you said, because you have to figure out how to read and understand the data, right?
Yeah, it's effort. It's effort, and to do something with that requires you to also have a network to maybe meet management. At the
Right.
same time, I think there's a fine line between making all of this information publicly available as well. Because for a lot of companies, it's their bread and butter, who their clients are, whom they're supplying to. So if we go out there and just do the work for a competitor by saying, here's a table with everything,
Right.
that's the other line of, yeah.
So one question I wanted to ask, do you think that in India, increasingly it would become much more easier to do this kind of research wherein you're able to connect with a lot of people? Because what I have seen nowadays is that every company has an external IR. And that external IR a lot of times provides a lot of valuable information. This is who, so like you also gave an example in case of dollar, wherein right dollar IR helped you connect with some other person as well. If I remember one of our conversations sometime back. So do you think it would increasingly become much more easier? I'm not saying the point that you have made that it's just accessible to people would be able to do it, but for someone who wants to do it, it would become much more easier to do it.
I hope so. I think I'm all for more price discovery. I'm all for, good insights being out there. I think there are very few people who take up that initiative. Everyone, at least from what I've seen on Twitter, and there's been a death of sort of long form content and analysis that, at least
Uh,
in the last few years that I've seen.
yeah,
So
that's
I
because
think
Twitter's
people can reach
L.
out to IR. Yeah,
Yeah.
sorry.
I was saying that the reason long form content has died is because the Twitter's algo has changed. So people are no longer getting their buck for the effort. So no, not a lot of people are trying to do it. Got it. Got it. So I think that broadly covers what I wanted to discuss. I mean, in closing, Chinmay, what I wanted with this podcast series is that for our viewers to have a takeaway in the end in form of a stock or industry that you think is looking interesting. You don't necessarily have to name the company. I mean, even if you give some directional insights, the viewers can go out and figure it out. And wherein you can also share one of the key insights that you discovered during a scuttlebutt.
That's a good question. So one thing that I'm really passionate about is I never talk about a company unless the valuations and uh, where it's trading at is at a point where I'm myself comfortable to buy.
Okay.
So I think the example I can talk about maybe is Samhi Hotels for a little bit,
Okay. Okay.
because that's a company that, as a disclosure, it's one of my largest positions.
Okay.
But I think it offers a significant discount to peers right now. And maybe I can talk about this a little bit. So for me, in Sami, it's a hotel company. Okay.
Mhm.
And I think the industry might be new for a lot of listeners. So I'll explain just a little bit and very quickly
Yeah.
about the industry and why Samhi in particular. But the hotel industry works in two ways. You need an asset owner who owns the
Mhm.
land, and you need a counterparty that owns the branding of a particular hotel that stays here. Once you have a hotel that's up, okay, the supply and demand works like any other industry. If you were to understand the hotel cycle, all you have to do is go and look at the number of keys in a particular city, okay, and compare that to the amount of supply that's coming in over the next few years. And at the same time, if you go look at airline, passenger traffic or office
Yeah.
spaces that are coming up, this gives you the demand side metrics for business hotels. So
True.
for you to understand Samhi as a business, all you have to do is look at tier one cities, and namely Bangalore, Hyderabad, and Pune. Okay. And the thesis here is that this, the variant perception is that hotels are inherently cyclical. Okay.
Mm.
This last couple of years has seen a particularly strong cycle for hotels. But here's the variant perception. The idea is that if you look back to 10 years ago, okay, each city had maybe 10,000 keys. Bangalore is a city in 2011 had 10,000 keys in this class of hotel. Then if you added 500 keys a year, right,
Mhm.
in Bangalore, that amounts to about a 5% supply growth, right? Today, what's happened is the number of keys in a city like Bangalore is 17,000. Okay, but the amount of supply that can come in any given year is still throttled at 500 because it's for several reasons. It's very difficult to put up greenfield
Yeah.
uh, facilities anywhere. It takes 6 years for you to
Mm.
stabilize the operations. Banks themselves are not sanctioning a lot of large supply for greenfield operations, which means your choices are to either have planned this out a long time in advance or to buy something and do it like brownfield or make an acquisition.
Yeah.
What this means is today, in any city, the number of keys that are coming in, you can track this by looking at a hotel, take the announcements of every hotel company and see the supply coming in. The supply that's coming in now, the base has become so large that incrementally the supply is only going to be in a 17,000 key market, 500 keys is nothing.
Yeah.
The same logic, when you take outside of the tier 1 cities, you'll realize how volatile the hotel cycle can be. So I'll give you an example of Sri Perumbudur in Chennai. Is a micro market for a hotel. There, the market size is 2,000 keys. So now if someone opens up a 500 key hotel there, your average room rate occupancies can fluctuate violently because that's, much larger increase when you add 500 keys in a Sri Perumbudur than in a Bangalore.
Yeah, true.
So today, the reason I think SAMHI is an interesting case study to look at is all the hotel companies are talking about chasing leisure in these tier 2 and tier 3 towns. And they're looking at not business, but leisure for travel and tourism. SAMHI is a company that focuses only on tier 1 cities like Bangalore and Hyderabad and only in business hotels in this. So it's a very boring business, right? But the idea here is that they trade at a really significant discount to the closest peer, that is Chalet. So as a simple metric, if you divided the market cap by the number of keys, right, Chalet trades at around 6x. So 6 crores per key. The market is giving it a multiple. SAMHI is 0.8.
Oh, wow.
Okay, and I think the reason for this is the balance sheet, where SAMHI got killed during COVID. The bankers took their pound of flesh. Chalet now has a clean balance sheet. They registered a QIP. But this number to me looks like it's going to get a lot better. The balance sheet is going to get a lot better over the next couple of years. And in that regard, I think it's an interesting idea which offers in this market a lot of margin of safety.
Margin of safety. Got it. So, guys, there you have a good, interesting idea to look into. Again, not a recommendation. It's an example that you need to look into. Chinmay has shared a lot of insights, not just about the business, but also about how the industry works. So thank you so much, Chinmay, for doing this. I think
thanks for having me. Really, I just want to say, I think I'll be a client for life. The work that you do, for a lot of the companies has been really, really nice. And where I've seen a lot of advisories chase momentum in this market, you've always covered ideas that offer a lot of margin of safety to begin with. So I'm really happy to be a client as well.
Thank you so much for saying something like that. So thank you everyone for joining. I'll share Chinmay's Twitter profile and also his Value Picker forum, Value Picker link on the description. Do follow him. He shares a lot of insights which are backed by his Scuttlebutt that he does on his Twitter profile. Okay. So thank you.